All right, what's up out there to all of my fellow gold diggers? This is your girl Rita, also known as the self proclaimed gold digger. If this is your first time to my channel, welcome. I am so glad to have you. But if you are a fellow gold digger, welcome back. Y'all know I love and I appreciate each and every one of you. So, tonight we are still continuing with our series where we have been reading, or I have been reading. I hope y'all have been reading along, but I have been reading Get Good with Money by Tiffany Aliche. And tonight we are going to be talking about how you can earn more money as well as talking about insurance. Okay, so that's what we're going to be getting into tonight. But y'all know I got to do a couple of quick little checks before we get started to make sure everything is okay. And then we're going to get everything going. All right, we are good there. And let me check one other place before we start. I hope everyone has been doing well this week. All right, and we are also good there. All right, yes, I hope everyone has been doing well. All right, so last week we talked about getting out of debt, and we also talked a little bit about credit. Y'all, I think I have talked about credit so much. It is, but like I said, it's so many things involving credit. But tonight we're going to be talking about how you can earn more. Y'all know I love talking about side hustles, but I'm going to be doing a little bit different. Not so much specifically talking about side hustles. If you have a main job, how you can potentially earn more there, as well as getting into it about insurance. Now, insurance was a longer chapter. I'm probably not going to cover everything regarding insurance on this evening because it is a lot, y'all. I have like 6 pages of notes just on insurance alone. And also too, it's a whole lot of information, and I want to make sure I'm not confusing y'all, because I was, some of the stuff is like, okay, I had to like reread it again to make sure I'm understanding it. So actually on next week I am going to be having an insurance specialist come in to answer our questions regarding insurance. So if anything I say tonight is confusing or whatever, y'all just bear with me because I'm learning right along with you, but hopefully it won't be. But even so, we'll have someone next week that will help us out more when it comes to the insurance. Okay. All right. So let's see. I have a couple of comments. Mumsy Ed, he says, I'm assuming this is a guy. He says, hello, ma'am. Good to see you again. I think this is your second time joining. So I'm glad to have you. Thank you. Thank you. Thank you. As always, y'all, I keep saying I'm so appreciative of my new subscribers that I have obtained. So welcome to the Gold Digger family. We are so glad to have you. And usually everyone is so welcoming. So y'all, tonight I'm just gonna jump into it because I know I have a lot that I'm supposed to be talking about, and I know I'm probably going to end up running out of time. So let's talk about ways that you can make more money. Y'all know my thing is one source of income is too close to none. So I'm always advocating for you to have some kind of side hustle or some kind of additional source of income. Don't just be reliant on one job, because the job can get rid of you at any point in time. Okay. Or they can downsize or whatever. So you want to make sure that you have another source of income if for some reason something happens. We also talked about a few weeks ago making sure you have an emergency fund. It was recommended that you have 3 to 6 months worth of living expenses in your emergency fund, and that is once you realize what all your expenses are, what income you're bringing in. So try and save up some money for an emergency fund for when stuff, things just happen. All right. So just be ready when life starts lifing. Okay. All right. But in the book, Get Good with Money by Tiffany Aliche, that's what we've been reading. This is in chapter 6 where it's talking about learn to earn. And that's how she's talking about how you can increase your income. Now, chapter 7 is talking about investments. I skipped over that chapter. Now, that chapter is also probably going to be a whole lot of notes and everything too. And I'm not as familiar on that topic as well. So we're going to do that later on. So that's why we skipped that chapter for anyone who has been reading along. And then we went to chapter 8 where it's talking about insurance. But chapter 6 is where she was talking about learn to earn. And when it comes to side hustles, and I've said this to you guys too, is you really want to see what skills you already have or already possess, that you could possibly utilize as a side hustle. Like I always say, I don't want to do a side hustle where it's anything mentally taxing for me. Like I got to learn a whole new skill or have to learn a whole bunch of new stuff. Like I don't want to do that. I want something that is pretty straightforward and pretty easy. So you want to see what skills you already possess. How can you possibly turn that into a side hustle? So the ways, she has 4 ways for you to increase your income, and she is looking at it from the perspective of you maximizing on your current job or your current income. So she says maximize your earning potential at your work, assess your skills that you have. Then once you've assessed your skills, decide what skills you can possibly monetize. And then she says put a number on it, which basically means set a money goal. But first, let's talk about what she is mentioning about maximizing your earning potential at work. So I know this is what I don't usually talk about. Like, how can you see ways for you to make or get more money at your main job, whether it's a raise, a promotion, something of that nature. So that's what she's talking about. So she suggests that if you are trying to get a raise or a promotion in your current position at your job, she says you should create a brag book, which I think is a great idea. And basically what that is you want to start keeping track of all of your accomplishments that you have made in your current position. Like if you've implemented something, if you obtained some certifications, if you've been recognized for something, whatever it is in your current position, if there is something that you have done very well, exceptionally well, received an award from, you want to start documenting that. So when it does come time for like your annual review, or you're up for a promotion, or you're asking for a raise, like you don't always have to wait until it's your annual review to ask for a raise. So if any of these things are occurring, you kind of have your brag book, your list of your accomplishments that you have. And this could also be, even if you don't have like certifications or awards that you have won, you can also put like, hey, I helped out when, the team was short staffed or whatever. I stayed over late or whatever. So it could be things like that. So think about those kinds of things where you might have pitched in and helped out the team and showed like your team spirit and your team work. Then the next thing she also says is build your skill sets. So she says, look for ways you can get better at your current job. So does your job offer you to have, additional trainings? Does it offer for you to get other certifications, or are there courses out there where you can get trainings or certifications? You want to be looking into those things and possibly suggesting it to your job to see if they might pay for it for you to get those certifications. And if not, you just go about it on your own and show that, hey, I've obtained these certain skill sets that can enhance your job or make you a better fit for your job. Now, I don't know if she said this. This might have been, I don't know if she said this directly or if this is something I interpreted from the book. I always, so I'm going to say, so I don't want to misquote her, but what I have noted down is observe what other people are doing in the same position. So if someone is in your position, or if someone is in a position that you are looking to obtain, that's a higher position and you're trying to get a promotion, observe what they are doing. Like, what skills do they have? What accomplishments have they achieved? What awards have they been recognized for? So you want to see, am I embodying what is required of this particular position that I'm looking to get into? So look at that. What skills do you have? What accomplishments have they made? And then also another key thing is you want to kind of get an idea of what salary they are making in that position. So when you are trying to apply for that position, you already have an idea, hey, it's 5,000 more, 10,000 more than what I'm currently getting. So you don't, accidentally lowball yourself or anything like that. So that's what you want to check out. Oh, y'all, you know what? It just hit me because I jumped into this because I was like, I got so much stuff to talk about. But I forgot to give the introduction for Tipsy Tuesday. So on Tipsy Tuesday, y'all, if you are new, what we do is, and I apologize, what we do is we take some sips as I share some tips. So I'm actually sipping on some wine, but I do have some water as well on this evening because it has been a long day. It has been a long week for your girl. So I apologize. So if you're new, that is what Tipsy Tuesday is about. You do not have to drink an alcoholic beverage or anything like that. And also realize I forgot to do the theme song. I'm not going to go back and do that. We just going to keep it moving and everything. Let's see. Still Rocks. What's up, Still Rocks? Good to see you. And he says, I'm going to watch in the morning. No problem. So that is fine. All right. So we're talking about maximizing your earning potential at work. I already mentioned create a brag book, build on the skills that you have, observe what other people are doing in that same position. And then also, if you are looking to go to a new job or like if you're thinking about leaving your company, you want to make sure you're asking for the most money at the beginning. Oftentimes when you switch professions, that is your, or no, I shouldn't say professions, when you're switching jobs, that is the key time for you to try and get an increase in your pay or what you're making. Once you have been with the company for a while, it's harder. You'll get pay increases, but you won't get, typically you don't get as big of a pay increase as if you went to another job. So I know millennials and stuff get a bad rap for like job hopping and stuff like that, but a lot of times they're job hopping because they're getting a higher income and you're not getting as much of an increase when you stay within a company. So just putting that out there for people to know. Let's see. Other things you want to make sure of is, right, and this was one that I thought was really good that, I mean, I do as kind of like a business owner and entrepreneur, but I think it would also be good as an employee. You should make work goals for yourself for the year. So if you are trying to make more money or get into a certain position, you should set certain goals for yourself for the year. Like, hey, let me make sure I obtain this particular certification by this particular time so that when it's time for me to, by the mid-year, whatever, when I ask for a promotion or a raise or something like that, I can say that I have these particular certifications. So it's like set goals for yourself within your job. And that will help you. I think that is just very helpful for employees. So you're not just waiting for someone to tell you what to do or tell you, hey, this position is available for you. You can be actively working to get to the next position, to get to the next level in your job and get more income. And you can even say to your employer, like, hey, I'm looking to be in a management position. I'm just using this as an example. I would love to be in a management position by this time next year. What steps would I need to take in order to start that process? Or what would that look like? What skills would I need? So have discussions, let people know that, hey, I'm looking for more money. Like, I'm not trying to stay at this particular level at your facility or whatever. I would love to go on to different levels and be willing and accepting of the responsibility that comes with it. All right. So that's how you can maximize the money when it comes to your current position that you have. Now, if you're looking to do a side hustle, this is where you're assessing the skills that you already possess. And we already mentioned, like, you don't want to venture out too far where you're having, well, you can, but usually my thinking is I don't want to venture out too far where I'm having to learn a whole bunch of brand new stuff. So you should see, what are you good at doing and what can you, and whatever you're good at doing, what can you make money at? Now, if you don't realize what you're good at, it's also helpful for you to ask other people who know you well or interact with you on a regular basis. Ask them, what do you think I do really well? Or what do you think I'm really good at? Okay. Or another way is, what do people always come to you for? What are people always asking you about? Now, when it comes to this, though, I think sometimes we look at things too specifically. It's almost like, I'm trying to think of an example. It's almost like, okay, so if you said, hey, I'm good with working with kids, and then you're trying to think of what can you do working with kids or something like that. Oftentimes what comes to mind is like teacher or whatever. But I think even with that, it's like that is too specific. Like, I'm good at working with kids. Why are you good at working with kids? Is it because you're patient with them? Is it because you show a lot of care and concern? When you look at it from that aspect, someone who has a skill who is very patient or very concerned, shows a lot of concern, you could fit into different positions that might not just be, related to kids or something like that, or in the aspect of kids that you immediately think of, like maybe teacher or something like that. Or someone who's patient, you might, sit with the older person who can't, do everything for themselves or whatever. But because you have that skill of patience and caring and concern, it kind of translates into those other areas too. So sometimes we're like, yeah, I'm really good with working with kids, but think about why are you good with working with kids, or why are you good at this particular thing? What makes you so good at it? And look at those other things that encompass that. Like, why am I able to do that? And see what kind of areas you can go into as well. And then also too, even with that same example, when it comes to teacher, even if you looked at, okay, I'm good with working with kids, I know I immediately think of teacher, but who else works with kids? Can you be a tutor? Can you be a babysitter? Can you be a coach? Can you be like a youth leader or a camp counselor or something like that? There's so many different areas that you can go to or possibly work in. But sometimes we get so focused and so specific, like, hey, this particular skill has to go in this particular direction, and that might not necessarily be the case. You can see what other areas or what other avenues you could possibly pursue with the skill set that you have. Okay. And then she says, decide what skill you can monetize. Now, one thing she did mention, I'm looking at my notes because I found this to be very important, because I see this a lot of times with people who are starting a side hustle. She puts it this way. She says, focus on being a business instead of just looking like a business. And what she meant by that is, oftentimes when people are starting a side hustle or starting some kind of venture, they will be so focused on, okay, I need to make sure I have a website. I need to make sure I have my business cards. I need to make sure I have all these different things where you haven't even made any money yet. Okay. And I don't want to downplay it, but it's like, this is a side hustle. Yes, it could possibly turn into your main hustle, but it's like you're focusing on things that make you look like a business, but you're not doing the things for you to actually generate money. So yeah, you have to definitely make sure that you're not just busying yourself with doing things when it comes to creating your side hustle, but that you're actually being productive in your side hustle, and making money, because that's the goal. The goal of this is we're trying to earn more money. So we are trying to make more money in those things like business cards and things of that nature, or getting a website that might not necessarily translate into dollars. It could down the line, but in the beginning, it's not the top priority that you probably need to be focused on. You probably need to be focused on, okay, where are my ideal clients and what do I need to do to attract these clients and stuff like that. And then worry about on the back end about creating a website. And nowadays, things are so much easier when it comes to the tools and resources that we have about getting our name out, like Facebook pages and Instagram pages that you can easily create for no cost, free, to kind of advertise yourself. But we're focused on paying this money to get a website. And please don't get me wrong that I'm saying that a website is not needed or that you shouldn't have a website. I'm just saying initially there are ways for you to attract your clients and start making money without you getting all these things to try and make it look nice, so to speak. All right. And then the last thing she says is you want to put a number on it. So I'm big on, you want to set a money goal. We just not out here doing stuff. So you want to set a goal for yourself monthly and then probably backtrack to see what that is weekly. So if your goal is $1,000 a month, that pretty much translates to $250 a week. And then from there, you need to back up and be like, okay, $250 a week. How many clients would I need to have a week to get that? If your services, let's say you're selling, I don't know, let's just say you're selling a product or something that's $50 or whatever, you would know that, hey, I need to sell 5 of these products to hit my goal to get $250 a week and ultimately get $1,000 a month. Because oftentimes, this is the thing, and I'm guilty of this too. We'll set a goal, and it can be a money goal, it could be any kind of goal, it could be a workout goal, all that kind of stuff. We'll set this goal that we have for ourselves, but we don't break it down to all the parts of what we need to do on a weekly basis, a daily basis, in order to achieve the goal. So when it comes to setting your money goal, you have to do the same thing. So you got to break, you can't just say, oh, I want to make $10,000 a month. That's good. That sounds very nice. But what does that mean? How does that translate for weekly? How does that look daily? And then even daily, like what does that look in terms of sales or how many clients you need to see or whatever? And if, like, say in the example that I used with $1,000, that's selling 5 products. If the products are $50, I have to sell five of those products each day to, 5 of those products that week in order to make that goal or whatever. But what we also don't think about, in order for me to sell those 5 products, I got to reach out to at least, at minimum, probably 5 people. And oftentimes you got to reach out to much more than that, at least 5-10 times more. So even for me to make 5 sales, I might have to reach out to 25 people just to get those 5 sales or whatever. So we don't think about it from that aspect. We just set this big old goal and we don't break it down into the individual parts of what we need to do to make it successful. Okay. All right. Let me see. All right. I don't have any comments, but I'm going to take a sip just because I've been talking a whole lot. And that pretty much will conclude what was it actually called? Learn to Earn chapter of the Get Good with Money. And then we're going to get into this insurance chapter. Y'all, this was a lot. And if y'all are interested in side hustles, y'all know my side hustles that I was doing was mystery shopping. I'm still doing the notary stuff. So if that's something that might interest you, check out the videos I have on my channel about getting into that, as well as the stuff that I have just about side hustles, because a lot of information can be applied to any type of side hustle. Now, let's get into insurance. Now, this is not, as popular of a topic. Nobody really wants to talk about insurance or whatever, but you do need insurance because it pretty much helps you. As she said, it helps to protect you from life's unpredictability. And she keeps emphasizing in this chapter that insurance is a risk management tool. Now, a lot of people, we get upset about paying insurance because you pay all this money in insurance and then nothing happens to you. That's a good thing, because God forbid, if something did happen, then you're utilizing the insurance, and we don't want anything to happen. We don't want to get into an accident. We don't want to have some major health issue. We don't want to have a disability or something like that where we have to utilize the insurance. But if God forbid something like that did happen, we have something in place, a risk management tool that will, help sustain us and help us to be able to still go on and thrive, hopefully, in life. So there are 4 different types of insurance that she talks about in this particular chapter. She talks about health insurance, she talks about life insurance, disability insurance, and property and casualty insurance. Now, before I get into the insurance, there are a couple of definitions that I want to make sure that we are all on one accord about. And those definitions are for a premium and a deductible. Now, a premium is what you pay each month typically, or depending on how you set it up. I know with auto insurance, it could vary, but a premium is what you pay each month for your particular insurance policy, for you to have that insurance in place. Okay. You're paying a premium each month. A deductible is the amount that you pay out of pocket before the insurance company will pick up the costs that you might incur for whatever type of insurance you might have, whether that's health insurance, well, not necessarily for life insurance, but auto insurance, disability insurance, that kind of thing. Well, maybe mainly health and auto insurance is the deductible. So no, the premium is what you're paying each month. The deductible is what you typically would have to pay out of pocket before the insurance company is going to kick in on their part. Okay. So I want to make sure we are on one accord with that, because I'm definitely going to be using those terms. Now, when it comes to health insurance, a lot of people have health insurance through their employer, okay? And if you don't have insurance through your employer, she mentions that you can go through healthcare.gov and look for private insurance through that. But mainly what she discusses in this particular topic is like the health insurance through your employer. And then she also talks about the deductible, the amount of money that you pay out of pocket before the policy starts to pay for your claim. Now, typically with health insurance, once you pay your deductible, then there is a co-insurance that you have to pay, and then there is a out-of-pocket maximum that you have to pay. Like, y'all, and that's what I said. Next week we're gonna just have an insurance professional on, because this is a lot, y'all. This is a lot even for me. So the deductible is the amount that you pay before the insurance will kick in. And then also you have a co-insurance. And this is what a percentage that you will pay. And then the insurance company picks up the rest. And then your out-of-pocket max is the max that you would pay out of pocket. And these things I won't say renew, but they expire at the end of the year. And then you have to keep, renew your insurance, so to speak. So let me give you an example. So let's say you have a deductible of $1,000 for your insurance. Once you meet that deductible, you just have to pay that co-insurance, and the maximum out-of-pocket cost that you would have to pay for health insurance is $5,000. So let's say you're going to doctor's visits and things of that nature, and you are responsible for paying that first $1,000 before your insurance will even kick in. Once you hit that $1,000, the insurance will kick in, but then you have a co-insurance that you would have to pay. And typically, a lot of times, the co-insurance is like you're paying 20% out of pocket and the insurance will cover 80%. That's the most common. It could be a little bit different. So let's say you've met your deductible, you're at $1,000, and now you're still in between. You're, in between the 5,000. So if you had a hospital bill, medical bill, doctor's bill, or something like that, let's say your doctor's bill was $500. Your co-insurance, since you met your $1,000 deductible, your co-insurance for that $500 bill would be $100 that you would pay out of pocket, and then the insurance company is going to pay $400. And you would continue to have that co-insurance until you hit that $5,000 max that you paid out of pocket, okay? And then once you've hit that max $5,000 that you paid out of pocket, then the insurance is going to cover everything. All right. So that's what a deductible is. That's what the co-insurance is. And that is what out-of-pocket maximum is. We already talked about the premium. And let me just mention your premium for your health insurance. It can vary based on your age, the number of people that are covered, your state, and the type of plan that you have. You also can get discounts for like healthy lifestyle choices. You might have seen that, like say if you exercise or something like that, or you're not a smoker, then you might get some discounts on your plan. I'm not going to really talk about Medicare. Medicare is insurance for people who are age 65 and older. We're going to get into, y'all, this is where it gets to be like alphabet soup. Oh my gosh. All right, y'all bear with me because it's a lot of different abbreviations. So there are different types of health plans, and y'all let me know if this is not making sense. Y'all don't have me up here talking and y'all like just eyes glazed over. So there are high deductible health plans. These are usually recommended for younger people, younger healthy individuals is recommended to get a high deductible health plan. The reason for that, even though it's a high deductible, meaning that you would pay a certain amount out of pocket before you hit your deductible. But if you're pretty healthy, you're probably not going to the doctor very often. So you're probably still not going to be paying a whole lot of money out of pocket. So that's why it's recommended for young people or younger healthy people to get a higher deductible plan. Usually with you having that higher deductible plan, your premium, what you're paying each month, is usually a lower cost for you. So versus a low deductible plan. Okay. So you're paying a lower monthly premium, even though you have a high deductible plan, because it's less likely for you to have to go to the doctor's office, or you have some kind of medical condition that is requiring care on a regular basis. So that's what the high deductible health plan is. Now there's a PPO. The PPO is Preferred Provider Organization Plan. Now this is usually for people who do have like ongoing health issues. They need more ongoing care. And usually with this, they can pick the provider that they want to go to, as long as they are within their PPO network. Okay. So just keep that in mind. PPO is more for people who have more medical conditions or just need more care. Now, she mentioned, and I don't know if these have changed, because this came out, her book has been out at least 2 years. So, and I know healthcare is always getting, changes are always being made. She said with the PPO plan, it does not typically have a HSA, but it can have a FSA. And I'm going to stop right there so I can tell you the difference between HSA and FSA. And now y'all see why I say it's like alphabet soup. Okay. All right. HSA. Well, let's start with FSA. FSA stands for Flexible Spending Account. I say it's inflexible, but it stands for Flexible Spending Account. It does not require you to be enrolled in any healthcare plan to have access to it if it is offered by your employer. Now, you save pre-tax money for qualified healthcare expenses, and it allows you to withdraw that pre-tax money for your medical expenses. The reason why I call it inflexible spending account is because it expires at the end of the year. That doesn't seem too flexible to me. So that's what the FSA is. The money is pre-tax. They allow you to withdraw it for medical expenses without being taxed. But with the FSA, it expires at the end of the year. The HSA, which is a health savings account, is only available if you have a high deductible health plan. But similar to the FSA, you save pre-tax money for your medical expenses, and it allows you to withdraw money tax-free for medical expenses. Now, this one does not expire, and you can also have tax advantages with it as well. So it says it has a triple tax advantage is because it goes in pre-tax, it grows tax-free, and then it comes out tax-free. And you can link your HSA to a qualified brokerage account, meaning you could be making money in, the stocks and stuff like that. So HSA is better, in my opinion, because since it never expires, and if you stay pretty healthy throughout your lifetime, when you get older, you're more likely to be sick, and you're more likely going to need some money. So this money has been building and growing for you until you get to be older, and then you can withdraw it for your different medical expenses pretty much tax-free. With this one too, you can also assign a beneficiary. So if you don't use all the money, you can pass it on. You can designate a beneficiary who can, get the money as well. And like I said, it never expires. So that's the difference between an HSA, FSA, which are part of these PPO, HMO plans. Okay. I hope y'all still with me. All right. So we talked about PPO. Let's talk about health HMO, which is Health Maintenance Organization Plan. These are usually more affordable, but with this, your primary care doctor is usually the one who provides most of your routine care. And if you need to see a specialist, they're usually the ones sending out referrals for you to go to another doctor. So it's like the PCP, the primary care physician, is kind of like your gatekeeper that pretty much provides your care. And if you need any specialized services, they're going to direct you to where you need to go. You don't really get to choose who you want to go to, like in the PPO network. Okay. All right. That was healthcare. And if you are self-employed, they recommend that you go to healthcare.gov to find your insurance. It is more expensive since it's not through your employer, but the premium is usually tax deductible. Okay. All right. That was a lot. We're going to get into life insurance, which is another beast to tackle. And let's see. What's up, Cynthia? I see you have joined. She says, excuse me. She says, hi, Rita and the Gold Digger fam. And then Cynthia also thank you, Cynthia, for liking and sharing. And it's okay. She says, I'm late. I had a meeting. I'll watch the replay to catch up. That is fine. Yes, when it comes to this insurance, you probably do want to watch the replay because it's a lot. But I mentioned that next week we'll have an insurance expert on to kind of answer some questions, and I have some questions as well for our expert who will be joining us. All right, so let's talk about life insurance. There are two main types of life insurance that you can have. So that is term life insurance and whole life insurance, or what's whole life insurance is also known as like permanent life insurance or universal life insurance. With term life insurance, the life insurance is only for a specified term. That's why it's called term. It could be 10 years, 15 years, 20 years, 30 years. There's even one, I think, up to 40 years. So you have the insurance for that term, whatever time frame it is, from 10 to 40 years. And at the end of that term, your insurance is up. The permanent or the whole life insurance policy never expires. So you will be paying premiums every month for the rest of your life until you expire. For term, you're just going to be paying those premiums or until the end of the term. Now, and in her book, she recommends that most people probably just need term. I mean, of course, assess your own individual needs, but term is probably going to be sufficient for a majority of the people. She was saying unless you make like a whole bunch of money, then, and she used examples like Oprah and Beyonce. Like if you're making that kind of money, then you might want to look into like whole life insurance and stuff like that. And she gives another example of when you might want to look into whole life. But term is probably going to be suitable for the majority of the people. Basically, she says the life insurance is supposed to cover you during your working years. So once you retire, you really should have enough income to where you don't need life insurance. Your life insurance is designed to replace your income if you die an untimely death and you have people like a spouse, children, or something like that who are dependent and reliant upon your income to get by. And that's where your life insurance policy will come in, as well as taking care of any debts and stuff that you might owe that don't expire once you pass away. Okay. So that is the whole purpose of life insurance, is to cover, like, say, if you have a mortgage, you trying to take care of your kids and stuff, and you die before they're grown and out on their own, you want to make sure that they have money that they can still live even though you are gone. So that's why oftentimes with term, once the term ends, you really probably don't need it because your kids probably are grown and out the house. If you did have a mortgage or something like that, hopefully your home is paid off or something. So you shouldn't have a whole lot of debt that you are responsible for if you were fortunate enough to live past the term of your life insurance. So just be mindful of that, because I know people, and even myself, I was like, well, what do I do when it expires or whatever, or when the term is up? What am I supposed to do for life insurance? But hopefully at that point in time, you are at a financial position where you have little to no debt, and you can, make the necessary payments for you to be able to, for you to be buried and that kind of thing, without it posing a burden on your family. Now, with whole life insurance, with that particular plan, like I said, you're paying your monthly premium until you die of it that accumulates a cash value. Most of the time, she says, you won't see the cash value until after you paid the policy for 10 years. But most people who have whole life insurance, they stop paying the insurance within the 10 years. Now, whole life is much, much more expensive than term life. So please, please, please be mindful of that. She used an example in the book. I want to say because she had did, I guess, an example, or they actually ran, like, say a 30-year-old female with term life insurance or whatever. Like, I think it was a 30-year policy. I think maybe it was like $40 a month for the person to pay, versus if that same individual got whole life insurance, it was like $700 a month. So just know term is definitely more affordable. And I can attest to that. Like, I have term life insurance policy, and I have $1 million worth of coverage, and I want to say it's like $35 a month. Now, I got it when I was in my early 30s. So the younger you are, the younger you get the insurance, the less expensive it is. And we're gonna talk about that a little bit too. I'm looking at my notes to see if I did write that down. But the younger you are, so the younger you can get the insurance, because you're young, you're healthy. The older you are, the less likely you are to be healthy, and that kind of thing. So, and the insurance company knows that, and you're more likely to die. So if you got a 20-year term policy, and you're 55, the insurance knows that you're more likely to die within those 20 years than you're not, versus if you would have got it at age 30. So it's going to be more expensive the older you get. So just be mindful of that as well. But yes, so term is definitely less expensive than whole life insurance. They also mentioned, I think this should be mentioned as well, when it comes to any type of life insurance policy you want to make sure you update your beneficiaries every time you have a major life change, whether that's you getting married, getting divorced, somebody dies, a baby is born, whatever. You want to make sure you update your beneficiaries, so when you do die, the right person is actually getting the money that you had for them. Okay, so just remember that, because like I said, I've had my policy since I was in my early 30s, and I probably have not. I mean, they send me little updates and stuff, like if their privacy policy changes, but I haven't looked at that policy or whatever. So you just got to be mindful of those things. And it's like an automatic payment that just comes out of my account. Now, how much life insurance do you need? She recommends that, or it is recommended, because she was referring to an insurance person with this in this particular chapter of the book. She says you should insure yourself for a minimum of 10 times your income. And she says preferably 15 times your income. And she says you also want to consider any debt or any family or financial responsibilities you have. So at least 10 times your income. So if you make $50,000 a year, then you want to have a policy that is at least $500,000, preferably $750,000. Okay, because remember, this is supposed to be like replacing your income for your loved ones that you are leaving behind, like your dependents, I should say, that you are leaving behind, like people who are depending on your income to survive. So you want to make sure that they have enough money to continue to live on, and also to pay off any debts that you might have. Okay. And she says, how long should your term policy be? And with that, you should try to get a policy that takes you to age 65. So it takes you to retirement. Because as I mentioned before, it should be less likely that you need life insurance by the time you retire. If you're retired, you're pretty much saying, I'm kind of set up. My bills are paid. You're pretty more self-sufficient and in a better financial standing, and people are less likely to depend on you. Okay. I will say this. I didn't write it down, or I don't see it in my notes. If you have, okay, I do see it now. So if you have a child who is disabled, who is always going to be dependent on you, or some adult child, I don't know, they just don't know how to adult or whatever. If you have adult children that are still dependent on you, then she said you might want to consider a whole life policy, if you have disabled children. So that you know they'll have some way to still be able to live and everything. And she also advises do not cancel any old life insurance policies until you have the new one in place. So that's what we're talking about with life insurance. We are going to, I'm doing better than I thought because I'm looking, okay, y'all. All right, I only have 2 more pages of notes. So we're going to quickly hit up disability insurance. And then we're going to talk about, she talks about property and casualty insurance, which is just like auto insurance and home insurance. I'm not going to touch too much on those because I feel like we're more familiar with those topics, those types of insurance than the other ones, because pretty much everybody usually has to have auto insurance and everything. And usually if you own a home with you having a mortgage, they force you to get homeowners insurance. So we're more familiar with that kind of stuff. So we might not touch upon that tonight, especially if we're short on time. Because y'all should be more familiar with that. But let's talk about disability insurance. Now, disability insurance, I always say it's probably better for you to have, I won't say better, but I would recommend for you to have disability insurance more so than life insurance. You should have both, but it's more likely for you to have a disability and not be able to work than you getting like completely killed or something like that. You should really have both, but definitely look into disability insurance because disability insurance provides you money while you're alive but unable to work. And just like with any other type of insurance, you cannot retroactively get it. So you can't just get a disability or find out or become disabled or whatever. And you're like, oh yeah, now I want to get that disability insurance. Same thing like with life insurance. Once you die, you can't be like, oh yeah, I want to get that life insurance because you already dead. Okay. So none of these insurances can usually be initiated retroactively. You need to have them in place at the time that you experience these different things. Oftentimes, though, your disability insurance, much like your health insurance, is through your employer. And if so, the benefit you receive can be taxable. And this is more so when it comes to like short-term disability as well as long-term disability. Now, if your disability insurance is, if you got it outside of your employer, if you got it privately and you're paying the premium on it, the benefits you receive are tax-free. Now, when it comes to the cost of disability insurance, they will consider your age. Once again, if you're younger, the premium is going to be lower. Your gender, there is an increased cost for females. And that's because they say, well, females are filing more disability claims because usually, you know, we're out for like maternity issues and things of that nature, as well as other health issues that are more prone to females. And she says in that instance, you want to look for plans or insurance companies or insurance policies that have a unisex rate so that if you are a female, you are not being charged a higher rate for that. They're also going to be looking at your health. They also look at your health. I didn't mention this. When it comes to life insurance, they have you fill out an application. You go through like an exam when it comes to life insurance, and you would do the same thing when it comes to disability insurance. And sometimes this particular screening of your health exam might be more rigorous than it was for your life insurance. They also look at your occupation. If you have a high-risk job, then your premium is going to cost you higher. Also, if you have a high-risk lifestyle, like if you do, I don't know, skydiving, bungee jumping, you race cars or whatever, I don't know, whatever, some extreme sports and things of that nature. If you have a high-risk lifestyle, your premium is probably going to be higher. And you also may not be able to be insured with some of the disability insurance based off some of the extracurricular activities that you might participate in. They also look at your income because once again, is disability insurance is insurance to replace your income because you're unable to work. So the higher your income, the higher premiums you're going to have, because the insurance, if for some reason you did become disabled, the insurance company is going to have to pay you more because you were accustomed to a higher salary. They also look at whether or not you smoke. Same thing applies for life insurance too. Usually smoking, drinking, those kinds of things, your premium is going to be higher. And then also the length of the benefit period, the longer the period of the payout, the more you will pay into the policy. All right. And then we're going to talk about short-term versus long-term really quickly. And the other key thing when it comes to disability insurance is the type of coverage, and that's any occupational coverage versus own occupational coverage. And I think I am going to wrap it up at that once we hit those topics. If y'all have any questions, y'all can put them in the chat. I'm going to try and answer them as best as I can for you. But I think we are still good. All right. So short-term disability. This is just a short-term loss of income, like if you had an injury or you became pregnant. And this usually is for a period like from 3 to 6 months or so. It can be all the way up to a year. And usually with short-term disability insurance, it provides you up to 80% of your income. And you commonly get this one through your employer. It is definitely more expensive to get this privately. And just like we talked a few chapters ago about having that emergency fund, the 3 to 6 months worth of living expenses, the reason for that is because the short-term disability insurance is so much more expensive. You probably would want to rely, if you had some kind of short-term disability and you didn't have it through your employer, or you're someone who is self-employed, you would want to rely on that emergency fund to get you by instead of having a short-term disability policy. But also just remember that the short-term disability is going to give you up to 80% of your income. All right. Y'all see a trend. It's like the insurance only wants to pay like 80%. Like even with that co-insurance, typically you're paying 20% out of pocket. I don't know. All right. And then the long-term disability insurance, this coverage can last for years. They said the average that the long-term disability typically pays is about 3 years. Now, they do have for long-term disability, excuse me, it has what's called an elimination period. And this is the waiting period before the actual long-term disability starts. Okay. And usually with long-term disability insurance, it provides you 40 to 60% of your income. I didn't realize that. I thought just like with short-term disability, it was going to provide up to 80%. Like, but that's a pretty significant cut to me. 40 to 60% of your income. Yeah. But anyway, so that's with long-term disability coverage. Now, within the long-term disability coverage, there is something called any occupation coverage versus own occupation coverage. With any occupational coverage, it won't cover you if you're still able to work in some capacity. So basically what that means is if, I don't know, let's say, I don't know. Let's say you had a job where, I don't know, you were a carpenter or something like that, and you got injured, your hands or something got injured or something like that, but you could still get a job answering phones or something like that and talking to people. The any occupation coverage, it won't cover you. You could still get a job where you're just talking on the phone, even though you can't work as a carpenter anymore. Then if you can do any other job, then your long-term disability is not going to kick in. It is not going to cover you. For own occupational coverage, it covers you if you can't work in your current occupation, even if you can possibly. So in that carpenter example, if they had own occupational coverage, if now they can no longer do any carpenter work, the disability insurance would kick in and cover them for the income that they lost from that disability as a carpenter. But if you had any occupational coverage, they would just say, hey, well, you can get a job, answering phones, and you could make money that way. And so the disability insurance is not going to cover you. Okay. I will say, as with me being a medical professional, usually they always advocate, well, all I've ever heard, they've advocated for us to have own occupational coverage. And for a lot of people, if you can afford it, you want to look into own occupational coverage. Because the same thing, like in that carpenter example, like if you've been a carpenter all your life, you probably don't want to necessarily go and sit and answer phones or something like that. But so if you can afford it, you want to try and get own occupational coverage. So that way it covers you like, hey, I cannot work specifically in this particular job. And the more specialized your job is, the more likely you definitely want to look into getting the own occupational coverage versus the any occupational coverage. Also, for more specialized professions, then you want to see if you can work with an insurance agent that specializes in your particular occupation or your particular field of work, because that way they'll be more familiar with the nuances associated with that. Same thing she used in her book, the example of like a physician. So you want to work with an agent who is used to working with physicians, or say if you were a lawyer or something like that, you want to get an agent who is used to working with a lawyer so that they will know your industry and know the nuances associated with it when it comes to getting you the disability insurance. All right. So that was long-term disability, short-term disability, property and casualty insurance. That's like your auto and home insurance. With that, you want to definitely make sure that you have enough insurance in regards to that. And really quickly, I will go over when it comes to auto insurance, just the different types of insurance coverage there is. There is collision, which covers you when you have an accident or there are any damages to your vehicle. Comprehensive insurance, that is comprehensive. It covers everything. So even though you didn't have an accident, say if your car got broken into or got stolen, then comprehensive is what covers that. Personal injury insurance, that covers like if you had any medical expenses associated with you being injured in an accident, as well as any lost wages. There's also uninsured / underinsured motorist insurance, and this covers you when the person at fault does not have insurance or does not have enough insurance. And then liability insurance covers you when you're at fault in an accident. All right. Thank y'all. I know this was a lot of stuff, especially with the insurance. But yeah, I have some questions for the insurance expert. If y'all have some questions for the insurance expert, they are definitely going to be on and joining me next week to kind of cover this stuff. And I don't know, there are some little nuances that I want to ask some questions about. So be sure to tune in for that on next week. And yeah, that's all I have. I will say, let me pull up. I know we need to cover the investment chapter, but we're almost finished with the book and everything. So probably after the week following with our insurance expert, we'll talk about investing. And then after that, we'll be wrapping up the book because there's only 3 more chapters left, and they're relatively short. And so I'm going to probably group them all together so that we can wrap up the book. And let me know, y'all, if y'all have, I have an idea. I'm reading another book about money, and it has I won't say another perspective, but I like the author's insights regarding some things as well. So I'm sure I'm going to be sharing with you about that particular book. But if y'all have any money books or money reads that I should look into, or money podcasts, let me know. Y'all know I'm always willing to learn new things. I'm always trying to find ways to figure out how I can make more money, grow my money, just become more financially savvy, whatever the case may be when it comes to money and finances and stuff. I'm just trying to get better at it, and as well as share the information with as many people as possible. So let me know if y'all have any recommendations for me. All right. So that is all. Let me see. Thanks, Cynthia. She says, yes, I'll be back next week too. Sounds good. Yes, I hope this was helpful for you guys. Like I said, it was a lot. It was a lot for me. So I had to call in backup, and that's why we're gonna have an insurance expert on next week. But enjoy the rest of your week. Thank y'all so much for joining me, and take care.